All right, let me just give me a blackboard. So let's start with multiple entries. Okay. If your risk is usually 1%, okay? If your risk is usually 1%, the ideal thing would be there to grab your first position at 0.5% and then enter a second position at 0.5%. What some folks have started doing is, okay, they enter this first position. Let's say we were going to grab this sell right here. Okay, let's say that you decided to grab a sell here. Okay, you were going to grab a sell here at this spot. Okay, and this is before this happened. Let me go to replay. Okay, you were going to grab a sell here, and you got into a sell. You go into your half a position lot size. Okay, you're going to trade 1%. Okay, you're going to trade 0.5%, and next thing you see is that, okay, well, that went way too fast. But anyways, these two green candles begin to happen. Okay, these two green candles begin to happen. So now you're here. Okay, this went way too fast. You're in these two green candles. So you're down. You started your 0.5% here because you thought this red candle was going to give you your automatic sell down. And you saw a retracement of whatever, 30, 40, 50 pips. Now, right now, you're only in for 0.5%. Okay, I'm going to show you two different methods. You're only in for 0.5%. You're waiting to see if the market is going to do a pullback or go in your direction. Okay, I was explaining this to somebody yesterday. It's kind of a psychology that I've kind of used. I assume that when I hit buy or sell, that it's going to go against me 100 points. That's the way I psych myself out when I was over trading. That was what they taught me to do, is think it's going to go 100 points. Would you trade the same lot size? Okay. So my question for you in the chat, and it's a yes or a no. Okay. This is not a Zoom. This is just a regular. This is on the app. If you were going to enter a trade and you knew the moment you hit buy or sell, it was going to go against you 100 points, would you lower your lot size? Yes or no? Would you lower your lot size? You knew it was going to go 100 points against you. Would you lower your lot size? Okay. HR says no. Okay. Yes, yes, yes. Okay. So the mindset is, if you're thinking that this trade has the potential to go against you, right, more than likely, the overwhelmingly majority of people, not everyone, would maybe lower the lot size, okay, because they realize they're going to be in drawdown, okay. So now you're only in 0.5%. Now price turns around, and then eventually, right, we're on the 1 hour chart. Let me leave this area circled right here, okay. We'll just drop it down to a 15, okay. Now you see that price here tops out and begins to come down and actually closes this 15-minute candle, okay, in your zone. What happens here a lot of times is that because this goes up, whatever number of pips this is, and I'm on a cryptocurrency here just because this is a clean chart, okay? What happens here a lot of times is that some folks will enter another position here, and then price continues to go up, and they enter another position here, and then price continues to go up, and they enter another position here. Now they're in 3, 4, 5 positions, right? Forget the over leveraging part. Now they're in serious drawdown, and they end up closing the trade here because they realize, oh crap, I'm in too deep here. Has this ever happened to you? Type the number 1 if this has ever happened to you. Type the number 1 if this has ever happened to me. And let me be the first one to type a 1, right? We overstacked it because we believed that price was going to go directly in our direction. We went in with a mindset of saying, I'm just going to go all in. And then price ends up starting not in your direction. So a way to overcome that psychology piece is to say, okay, here I go for this sell and I'm in it by 0.5%. And again, this would be different, by the way. If you're risking 2%, then this would be 1%. If you were risking 4%, this would be 2%. You cut in half your first trade. Okay, you cut in half your first trade. This trade goes against you. The next time that you should be looking to enter to stack the next half in this scenario would be the moment this candle closes. You now have at least somewhat of a confirmation. This is where you would go the next half, okay? And then you eventually write it down to whatever your profit level is, okay? So this is one scenario on how to maybe minimize your first entry in the event that you sell here, okay, and price goes up, okay? Because a lot of us would be entering, again, same scenario, multiple. Instead, you're only down 0.5%, right? Your original risk was 1%. Meanwhile, price is doing this, you're not feeling it as bad because your risk was only half of what you normally or intended to trade. This same scenario plays out, but it goes much higher. You're not so much freaking out if you truly believe that you're going to stay in this trade. You still don't enter the next second half until this scenario happens, and then you're writing now from this point, you're writing your original 1%. Okay? So you intended to go 1% here, no matter what, but you only went in half. You weren't feeling sure about yourself. You want to protect capital. You want to work on your psychology. Whatever the case may be, you decide I'm going to go in half. And I know the question that I'm going to get. Okay? Well, what happens if the trade does go in my favor? Let's say I entered here and boom, it does go down. Okay? The candle, that's not a good candle. The candle does go down and I hit my take profit here. Damn, professor, I did not catch my 1%. No, you caught a very chilled 0.5% down to whatever equity is. Okay? Because now you have two options. Because you're only in 1%, you can maybe say, okay, I'm going to take some profits off the table, or I'm going to see if I can let this run to eventually I get my 1% return. So you have two options. You have the other option of saying, well, maybe I get in again, another 0.5% lower if you know what you're doing or you feel confident. Or you just say, instead of now taking a quick profit at 20 pips, let me try and grab a double, right? If 20 pips was half a percent gain, if I can grab 40, okay, if I can grab 40, which ironically just happens to be 40, okay, I still made my 1%, but I only entered with a 0.5% gain. Okay, so I lessened my risk, but I had to go for more pips if I'm still looking to get my 1%. I just believe that this, for a few folks that I've been coaching, has completely changed the game because they're no longer stressing. Okay, a lot of people feel that the moment they hit sell, price goes up. And the moment they hit buy, price goes down. They just feel that they're brokers against them, right? Have you ever had that feeling that you feel like they're out to get you, right? They feel like you're out to get you. You're totally opposite of what you normally would do, right? We've all been there, okay? I thought the first 4 years, I thought my broker was screwed, okay? You hit it one way and it goes the other way, okay? It's just that the timing of the entries, you're just off on the timing of the entries, right? Earlier today, the timing was to buy crude oil, right? But not to hold crude oil forever, because now crude oil eventually, I think, went down or something I just saw recently, right? Back to those lower levels. So everything is about timing. Is your timing good, right? Based on structure, right? Based on current structure. So one way to minimize that, and I'll challenge some of you to do this, is to take your original, original risk, okay, and divide by 2. So if your risk is 2%, if your risk is 2%, then you are going to start with 1%, and you are going to basically say, okay, my 2% now becomes a 1%, okay? And the only difference there is if you had done your equation, okay? And let's go over here. Let's say that you had done your 1% here. You were going to buy the sell, you were going to sell the break of this structure, and you decided to go in just 1%. and you calculated, right? If I don't know if you're using those calculator tools or not, but let's just say that 1%, because you're looking for 2%, you were looking at you needed a gain of, whatever it is, 20 pips for that. Okay, you needed 20 pips or 20 points for that. Again, this is crypto, so it moves very fast. So let's just say you needed. Let me do this on a regular chart. All right, let's go to the NZT GBP. Okay. Let's say we were going to trade the break of this candle, and you originally said that your 1% would have sat at 20 pips. Okay. So in this scenario, you get 14, and then the market reverses on you. You end up closing your trade. You don't get your 0.5%. You don't get your full 1%. But guess what? You protected your trade, right? You got in with less risk, and look what happens eventually, right? And the reason why I say this is because a lot of people are having trouble with market psychology. They're seeing this, and they may not close. You may say, well, I'm not going to close. It's going to reverse on me, right? The goal of this is that you're not re-entering here, you're not re-entering here, you're not re-entering here, because I would hope that you would have protected this trade. But if you did, let's say you did it, right? Price ended up going back above here, and you left this trade open because you only went in with a 1% risk. You didn't go in with your usual. You're going to probably be able to absorb this a lot than had you gone in with your original 2% risk. Okay, and you are really at this point, you're just letting this trade play out. You are not entering another trade until you get a candle to close back below this area to then run it to where maybe you intended to originally run it. Okay, kind of same thing here. If you were looking to trade the break of that and your 1% was here, okay, then you ask yourself, okay, I got my 1%. Could you then find another area to maybe look to enter the other half that you didn't enter? Well, again, I wasn't going to do it on this video, but you're gonna find support and resistance areas and look to see if you feel confident enough to re-enter, which all this did was come back, retest this area, and then drop again. Then this is where they say, okay, this is the second entry. You're cashing in your first entry, and you're trying to grab the next 1% down. But what I'm seeing with folks that I'm working with is that the psychology shift, okay, is helping, because this is what's happening a lot, that they're going in for a sell here, and then the market does this, right? But they're too heavily invested on the front end, right? I'd rather you make smaller profits and build over time than have to sustain this type of movement. Because as you can see here, on this, whatever pair this is, right? All we did was we ended up coming right back to break even. We ended up basically coming right back to the zone and retesting it. So you never got your scenario too played out, right? But at least had you been able to sustain this 1%, if you didn't close, right, you're closing back here at break even, or very much more of a minimal loss type of thing. I'm just trying to find ways to maybe change your psychology, because if you let 2 losses of 100 be your winner, meaning you're letting 2 losses of 100, but then you're winning 2 of 20, this will always win. You will always be in the red. You will always be in the red. You're not going to be able to make it up. And then, unfortunately, this is where greed hits. This is where revenge trading hits. This is where trading psychology hurts, because we're allowing the losers either go too much, but if you can cut the initial investment in half, you're going to have more opportunities to then do this. And we'll talk about this more in the mastermind when we come back up here, right? Now that you're up here, right, you're looking for those levels. Why not add your second percent here? So you went in 1% here, you're in drawdown. Now price comes up to a level, we see a distinct change, you go into your next 1% here. So while this 1% sits up here in a red, this 1% is making it green. Guess what, right? You can at least break even here, because you have a entry here and you have an entry here, which are now basically offsetting each other, versus just trying to wait. And this is what institutions do. They enter here and they enter here, and eventually they just do a dollar cost average. They just do a dollar cost average when you see those, when you see those big movements in the market. So I'm just trying to think of a way to help many of you look at your entries as, if I'm going to go in at 2%, okay, just divide that in half. Start with 1% and see how your trade goes. Because I can guarantee you a lot of times the trade does go in your favor. And instead of you cutting it off here, where you only would have gotten your 1%, right, which you shouldn't be greedy anyways, it comes down to this level and you still grabbed your 2%, right? But your initial risk was a lot less. Okay, your initial risk was a lot less. Okay, so it's a way to change. Let me go on camera real quick. It's a way to change to rewire the focus. Okay, it's another way to rewire the focus, and it's a different approach. Now, again, I don't have a large test pool. I've got about 4 or 5 people that I've been working with privately who have begun to do this, and they're seeing the results now, the trading psychology, okay? So I'm already here. So again, we'll talk about it. I think you saw Pete allude to it earlier, right? We look at candles. When we see the color red, we think of negative, right? We think of negative when it's red. Okay, especially if you're trying to kind of buy, right? Or if you're in the middle of a trade in these areas, we tend to look at red as a very negative candle. Okay, very negative candle. So why not just change your candles to like what he did, white? If you're struggling with that, change your candles to white. White seems to be a very pure color, right? It doesn't have to be red. I like these colors because it's a black background. Christmas is my favorite holiday, so I have Christmas colors. You can make these anything you want. You can go to settings and you can change the colors of everything you want to change in here. You can change your symbols, okay? So if you want this to be white, just go into the settings up here, click on symbol, and change all these to white. If that's going to help you with the psychology, change it all to white. Now, oops, I did it backwards. Okay, I did it backwards. We didn't want that. We wanted to change the white ones. Okay, now we want them all white. So just to give you an example. Okay, so now you don't have red candles. You're not looking at red. That's a negative color. You're just looking at a pure white type of candle. So maybe that works for you. Okay, you saw Pete mention earlier, I guess he took my advice yesterday or something I had, read about the trading psychology, and he implemented it. He says, man, it looks different. It's not red, right? It's not so negative. So whatever works for you may not work for somebody else. It's just a different way to look at it and saying, man, red could be very aggressive. Red could be very, negative. When we usually see of red, we think of, oh my God, when we have a major sell-off, all the charts are red. It's a very negative color. We're taught early in life that red might be a negative color, especially in trading, right? So change it up. Doesn't have to be red, right? Put your favorite color on there, right? Put your favorite color on there. So it's just a different way to look at the approach and saying, if you're going to go into a, sell here, okay, in this area right here, you go into a sell and price does this, my best recommendation, and it's the hardest thing to do. It is the hardest thing to do. As this is moving up, you believe, right, this is what's going to happen. You believe that, let me drop down to the 15-minute candle. Bar replay. Right, in your mind, you believe that as price is moving up, like we've reached the end, right? You're in a sell here, and you say, okay, now. And so you add another position there. And then you say, okay, it's going to turn around. And now let me get rid of this damn candle. Now you think, okay, now it's going to turn around. And you say, okay, it's going good. And we start saying, okay, I'm in my second position. Things are going good. And now we see a little uptick. And as price begins to move, right, the higher that it goes, we start to, with no support or resistance, just flat out looking, we could get very trapped into adding additional prices up here as price moves up. And then we're in for 2, 3, 4, 5 positions because we're thinking, okay, no, now it's going to reverse. And then we add another position here. Okay, and then we add another position here. We already added one here, and we have original entry here, right? And then price continues to move, right? The best thing to do, this would be my advice, and try this, and then let me know in a week or two. I would, from your original entry, if this happens, and you believe that you want to hold the trade, just grab a horizontal line and put it at your entry. Okay? Use whatever color you want, make it white, make it pure, and you are not, and you're going to set an alert right before your entry. And you are, oops, drawing what I know. You're going to set an alert right here. Okay? And you are not going to enter again until one of two things. Either price has gone to the point where now you need to close because of your percentages, or price goes and hits a level that you feel confident enough. I'm going to speed this up a little bit. And you say, okay, maybe I don't know where the levels are. So if you want to play it conservative, you just let it write it out. You're eventually just waiting to re-enter down at this level here and just keep your original position and then stack it. In the meantime, you're just letting price move. You are not going to enter anymore because if you're unsure with structure, right, you don't want to risk your margin. You're just going to let price, I got to move this faster. You got to just let kind of price move and say, okay, I'm still in my original trade, but I'm not going to, and this takes a lot of psychology. I'm not going to do anything with it, right? I'm down my 1-2%. Now what happens here? Now this was your go. You're in the money for position one, and this, if you kind of, been around for a little bit, you realize that, even if you didn't get in the second position, this gave you an opportunity to get in the second position, right? Boom, back up and back down, okay? So it's just a way of saying, how can I look to maximize my positions, lower my risk, because maybe my trading psychology is all messed up, right? So by being patient, yes, you may have grabbed less than you intended, but man, you still made profits, right? You didn't have to risk multiple entries. Just let it play out. Because if you do this scenario and you're in 5 other trades, that's where you blow your accounts. That's where your margin levels get hit. So you can't be doing this on 5 different accounts, right? So you want to, for most of you, you're dealing with a pretty, average account size or a small account size, right? 1 trade at a time and be patient, maybe 2. But if you reduce the risk in half, you can be into 2 trades, for example, while this is happening. And now you just got to sit back and be patient. Don't enter any more trades. Your payday will come, right? Your payday will eventually come, but you got to be patient. It's a way to reduce the risk and ask yourself, man, maybe if I'm too aggressive, if I've been way too aggressive and I'm putting myself at margin risk, okay, then you will not do it. Anesthesia, now $200 capital, really you should just be trading 50 cents, 0.05 per entry, per 0.05. That's it. And you cannot trade the indices with a $200 account. You need to stick to Forex pairs. Regular Forex pairs, I would suggest odd USD, Euro USD, where they maybe move 80 pips a day, 100 pips a day max. Don't do the JPYs. They can move 300-400 pips a day. On a $200 account, I'll give you the same advice my mentor did when I opened up my first $200 account. AU and EU, that's it. Because you could be wrong there, and it's not going to move that much. But on the other ones, you cannot trade indices. I wouldn't trade gold. I wouldn't trade silver. I wouldn't trade oil. I wouldn't trade JPYs. EU and AU is my best advice for anybody with under 500 bucks. 50 cents a pip until you start growing your account. If you stick to the trading plan, if you stick to that, spreadsheet, and you do what your 1% is a day, you're going to be fine. Make it a week, make it a month. But you should not be in those high volatile with a couple $100. You're just asking to blow your account. Especially at the beginning when we're into this 6, 7, 8 years, and sometimes we have psychology lapse. So as people are brand new, you've got to be able to be patient and just trade the slower pairs, okay? You want to be able to trade, and by the way, Euro USD gave me that alert, but I don't think it's ready yet. You want to be able to trade, the slower pairs, okay, because they don't move as much. Let's go to a day candle here, all right? So Euro USD might be setting up here. Okay, might be setting up here. Now there's news at 2 o'clock, so it's coming. But okay, I'd love to see it for it to go just a little bit higher, but that's Euro USD. If you look at these day candles, right? Look at these day candles. Okay, so let's just take a look at today's day candles. 63 pips movement so far from open to close. 66. 85. So let's take a look at this big one right here. Oops. This is probably the biggest one you're going to see ever on Euro USD. 139 pips. And that's the biggest one. Look to the left. You don't see a lot of big candles like that usually on Euro USD. 136. So 136 to 140 is probably their ATR. That's the average that they're going to move per day, right? I would say their average is probably about 80. 60 to 80 is going to be the average. Those 130s are going to be the large ones. So you don't have something that moves 1,000 points like on the indice that you can blow your account. So if you're wrong here, there's going to be a stopping point. And remember, this is 80 to 100 in both directions. Even though it looks like one solid candle, we did have ups and downs in this. So I always tell people brand new, Euro USD and odd USD are the best two pairs to trade at the beginning. Because if you make a mistake, you make a mistake, but you're going to be able to get that mistake back. Okay, might take a little time, but you're gonna be able to get that mistake, because these candles do not move a lot within a day, especially if you're trying to scalp it. Okay, especially if you're trying to scalp it. Okay, so consolidated. Yeah. So listen, Gustavo, good question. Very few people do this because. Hold on, let me see what this alert is. Now my phone decided to freeze up. Let me let this sit here. The buckets, very few people here are doing this. A few people have said they're going to try it because they have small accounts. They're dividing their bucket into 3. Okay, they're dividing their bucket into 3. So if you go on that risk calculator and it tells you should be looking for $50 for the day, whatever that, percentages or whatever, right? Their first goal is to try to grab $15 for the day. And then if they can get more on that, let's say they call this a sell. If they can get more, that's great. But right now, this is the same analogy I use. And this is why I'm so big on the 20 pips, right? If you can't, for 30 days, this would be my challenge to you who are watching this, for 30 days, okay? And again, I think I love challenges. A lot of you are trying to do these prop firm challenges and pass all that stuff. You already know my position on those, so those are brand new. I am not a fan of prop firms. Hell yeah, they might give you a lot of capital up front. I think there's too many loops and holes that you have to do that are intended for you to fail, to maybe get partial money. I'd rather you put $200 in an account and learn, because if you can't grab 10 to 20 pips consistently, okay, for 30 days, how do you expect to have bigger days of 50 pips or more? We all going to get lucky on that one day. You might get lucky on that second day, and then the next day, you lose 300. You just wiped out everything here, right? You're now in the red for a while to catch up, right? So this is why if you're brand new, if you're struggling, you've got to go back to basics. I kind of equate it to like Major League Baseball. When you're struggling in the major leagues, they send you back down to AAA, AA. There's a step pad, right? You go to rookie ball. You start at rookie ball, right out of, then you go to A ball, AA, AAA, and eventually you try to make it to the big one, right? You try to make it to the MLB. But at any point here, you struggle, you go down one level. You struggle, you go down one level, right? And I think the trading is the exact same thing. If you've been struggling, right, to catch pips, why not put yourself on a cleanse? Just like we do liquid cleanses and cleanse your body, why don't you put yourself on a 30-day cleanse where after you just go for the first 15 days catching 10 points, 10 pips, 10 ticks, whatever the case may be, and you shut it down to build that repetition, to build that consistency. Don't worry about the profits. That's the problem. Most people here are only looking at the profits. They're not looking at the consistency piece that's needed to be doing this for long term. They're not looking at the returns at the end of the month. You're only focused today on how much damn money can I make today. That will only work so far. I'm going to be honest with you. That's only going to work so far. So if you can challenge yourself to say, how can I have the bigger paydays if I can't even catch 10 pips consistently a day for at least 30 days? And then I'm going to scale to 15 to 20 pips a day, forgetting about the money. Even if you have $10,000 in your account and you're trading $1 and you're making $10 a day, if you can't do this and find entries that give you this every day for 30 days, imagine when you go in at $100 a point and now you're down 1K because you never built this consistency piece early on. And if you can't do this consistently, how will you trade and how will you expect to have a 1K day off a $5,000 account unless you're willing to blow your account? So it's just rewiring and there's days that we all have mental lapses, but it's rewiring the structure to say, how can I build that consistency piece, right? How can I build that longevity piece if I'm not willing to do the work upfront, right? So there's just a lot of different ways that you could need to be rewired because everybody, okay, Rich, I would go to babypips.com. They got tons of free calculators. It'll do your risk for you, do your lot size. Just go to babypips.com. Babypips, Pips.com. That's the one that somebody shared yesterday. Okay. So yeah, Albert, hold on, let me get to Rewired. Yeah, listen, if you're going to scalp for 10 pips, yeah, I'm not telling you to give up 100 pips on the downside. It's all going to be about entries, right? Maybe you have to close at 5 pips, but depending on the instrument that you're trading, 5 pips on oil or the indice could be a quick wick of 0.1 seconds and you're out of the trade. And then your psychology is all messed up. So when I talk about 10 pips, the best way for you to do that is to do that on Forex pairs because they usually don't provide a lot of those wicks and everything else that are happening, okay, on these types of pairs. So, again, if you're going to try to trade for 10 pips and you're just looking to scalp, and again, change the focus from daily, maybe to weekly, okay, or monthly, right? Change the focus off a $200 account if you're looking for 1% daily and you want to try this out for 60 days. 60 days, not 60 years. I won't be around. 60 days, no weekends, right? Starting today, focus on, even though here daily, they tell you what your percentage is. See, this is the problem. Everybody only wants to look. Oh my God, what the hell did I just do? Hold on. Look at my switch tabs. All right. Everybody always wants to just look at the final balance, right? So if you challenge yourself for 60 days, okay, and this is nothing here looks sexy. Trust me, nothing here looks sexy, right? My mentor 3.5 years ago had me sit and do this, and I had to show him this is why I kind of want to do like an accountability type of thing, where I had to change the focus from daily to monthly, where institutions are. So maybe if you just look at this piece right here versus this almost forces you per day to say, okay, I got to get $2. I got to get 204. I got to get 206, because at the end of 60 days, I want to be able to try to take my account from 200 to 300. Now, that doesn't look appealing, but everybody spends time in this category, right? Maybe if you just do one click and say, what do I want to be by the end of August, right? Can I be at 214.43? Now you're saying, oh my God, $14. But you see, $14 is relevant to the account size. It's based on the percentage, not based on the profit amount. I really can care less where I am daily. If I'm in the red at the end of the month, I did a bad job. If I'm in the green, okay, I did something well, no matter how green I am, right? I don't really care about any losses that I could have taken last Tuesday or last Thursday. I don't dwell on losses. I don't talk about losses because that can put you in a very negative mindset. I care about where is my balance at the end of the month. And if I'm anywhere on the green side, if I made more money this month than last month in my account, that's a win, that's a W. But most people are sitting on the losses or the crappy day, and you let that language come into your daily existence, you will continue to lose. You will continue to be a loser. That's like in life. If you continue to dwell about the relationships you could have had and didn't have, you'll continue to be a loser, right? If you continue to dwell about the addiction that you had and you don't focus on the positivity of changing it around and your story is always Debbie Downer, you will continue to be a negative person and nobody want to hang around with you. So it's about changing and rewiring the mindset. Focus on what you did well for the day. Go back and learn. That's why it's either a win or a lesson, right? If you lost, I don't consider it to be a loss. I consider how much money did you pay for today's lesson? So if the lesson costed you today $200, today's lesson was $200. That's it. You paid for a coaching lesson. Today costed you $200. So I care more about this category than I do over here. So rewiring, this just gives you a blueprint, right? This just gives you the opportunity to look at something and say, where could you be weekly, right? Are you on target, right? It's nothing more than are you on target? And if you're not on target, it doesn't mean to accelerate or deaccelerate. It means to then go back and say, well, if you're not on target, why? Is it the hours that you're trading? Is it the commodity that you're trading? Is it the symbol that you're trading? Is it because you're trying to get trade alerts from 20 different areas and you're not focused on a handful of charts? That becomes on you, right? Because the charts don't lie. And it looks like very simple, but if you can't do this, if you can't make these gains for 60 days, how do you expect to then and not blow your account? If you can't do this for at least 60 days at the beginning. So sometimes resetting yourself, rewiring yourself to go back to basics and say, man, let me put $200 in a separate account. And again, I would love to do this and we can do it together, that we can just say, put a small amount and just every day, that's all we focus on, right? But I see it here, you know, like crude oil or this, if we do a challenge, of course, listen, I'm not telling you what to do. It's your life. It's your account, right? You can do whatever you want. People will continue trading in the afternoon. They want to get more and more and more. That's fine. That's why I disconnect after a certain time, because if we know that there was profits available, why would you want to go back and give it back? Why would you want to go back to give it back? That is the hardest thing to do. Okay. That is the hardest thing to do. Yeah, Rich. Yeah, you pay premium for some lessons. Yeah. Okay. That is the hardest thing to do. The walking away piece is the hardest thing to do. I'm a victim of that. Every week I'm a victim of that, at least at one point during the, oh, let me go back. Oh my God, perfect setup. I might be driving. I got an alert. Oh, let me set an order bracket real quick. See if it hits. Right? I'm guilty of that too, but I've learned to minimize that to a handful to where it used to be 30, 40 times a week. Right? Now it might be 2 to 3 times a week. Right? If that sometimes. So it's just a matter of saying, when is enough enough? We know where the journey takes you. Right? So you then take your profits here. Let's say you screwed up. You only made $50 more. And then you do it again. If you didn't hit your goal, you then start with, guess what? You're 250 again. And this is only a 1%. And you just do it again. And you say, okay, my next 60 days, I'm going to redo this again because now I'm looking to try to get to 379. So all of you that are doing prop firm challenges with somebody else's money that you have to give them back, if you did your own challenge, it would be all your money. And you don't have to pass hoops. You can keep your trades open. You can swing trade some of these to get to the final green line. You don't have to close your trade, but you can't trade. This is just real raw talk here, okay? If you can't trade a $200 account on your own without blowing it, how in the hell are you going to trade a free $100,000 account with all the limits and hooplas that are surrounded the way you can trade that? 99% of you will fail that. I'm just letting you know. Why do I know? I've never done prop firms, but every friend of mine who tried a prop firm, there is not one today still trading on a prop firm. Not one. Because they never learned how to grow $200 to $500. And yet you want to be given $100K with parameters and limits? Never happened. So good luck to everybody on the prop firms. If I can help, I'm going to be your biggest supporter. I think prop firms are set to have you fail. Prop firms are set. I tell people this all the time. People that have been here before can testify if I got to go back in my videos to find it. I'd rather you save $200 on your own and learn how to compound the way I just showed you on your own, no hooplas. It could be one swing trade that makes up your entire month. You just let it run type of thing. And you made your percentage versus trying to trade every day, which is another victimization that I believe I contribute to our group sometimes, that we have to trade every day. We should only trade the best setups of the day. The best days are always Wednesdays and Thursdays, news barring, right? So we get into this trap that we have to trade every day. So again, this is just a mindset. I just think that those firms are set out to be, for whatever reason, it's going to work for less than 1% of the traders, okay? Just like less than 5% of people will be trading Forex. When I say Forex, futures, whatever, 5 years from now, less than 5%. Why? Because if you can't catch, if you can't turn 200 to 500 on your own, doing it the right way, how can you be trusted with 10K or 100K? You're setting yourself up for a mental disaster, a mental disaster. So all you need, and I go back to when we first started this group, okay? All you need, and it was the original website that I had, 20pipsaday.com or something like that. All you really need is 20 pips a day. So I'm going to call it 100 pips a week as your lot size gets bigger to be extremely profitable in this market. That's all you need, right? And 20 could equate to 80 ticks or 90 ticks, whatever symbol it is that you're trading. That's really all you need. So I am the #1 guilty person of over trading every day, right? Because I get more than 20 pips. I really should be walking away after 20, right? So yes, these communities are great, but again, tell yourself, lock your phone, throw it in the lake, buy 30 throwdown phones, use one every day, whatever it takes for you to realize, right, that the numbers are right here in front of you, right? That is a 1% a day. So the example that you're seeing right here in front of you is a 20% gain a month, a 20% gain a month. Not even the S&P does a 20% gain a month. They average that per year. Is 20% sustainable long-term as your account gets bigger? The answer is no. That is why I dropped down my entries to 1/4% to enter usually my first trade, right? Somebody asked me the other day, we noticed, you don't take a lot of losses. I don't, because I can swing trades now until the cows come home, because I learned that I could not sustain 1% in a futures account. I couldn't. It was too mentally challenging. But by 1/4%, hey, go run. I'm going to find the best spot to then jump in another 1/4%. And then I'm going to find another spot if needed, or eventually I'm just going to wait till it comes around. So it's just a matter of retweaking the mindset. That's it. All I care about is, where am I at the end of the month, and am I moving towards the right direction, right? I really don't care if you have a losing day or losing week. Where are you at the end of the month, and are you growing on it? But if you're dwelling on your losses, if you're entering the negative energy into your brain, you'll continue to suffer. You'll continue to suffer, right? So they're not losses, they're lessons, okay? And they're not, you can say they're wins or they're progress, whatever you want to do. So change the terminology. Hey, I did well today. I made progress, or I learned a lesson. That's it. You either make progress or you learn a lesson. That's it. That's the only two options that you have to stick with it. Okay. So I've got to go. Get ready to pick up my one from school. So I just wanted to kind of reset the bar, maybe for some of you, okay, on today's session, to say, how can I go back? If you've been struggling, if you've been blowing accounts, if you're more in the red than the green, there is nothing wrong with saying, hey, I need to go back to 10 pips a day, and let me see if I can do this consistently for 30 days, right? Not worrying about the dollar amount, but worrying about the consistency piece, right? And if a 10 turns into a 30, you're already up 3 days. You don't change the lot size the next day. You go right back. If this first trade here, if you were supposed to make 250 on day one and you made $10, right, and you're entering the numbers into your lot size category, you're not going to up the lot size on the next one because you think you have extra profit. No, you stay the course. You're looking for 253. You're looking for 255. You're looking for 258. And you run with those numbers. Okay? And you run with those numbers. That's the best advice I can give you from someone who has struggled, from someone who had blown accounts, from someone who had to get rewired, from somebody who still makes the same, let me get back in type of mistakes. Okay, we're all human. Forex is all about, trading is all about psychology. It isn't so much about buy or sell, right? The market's not against you, is that we got into a bad timing. That's it, right? The trade went against me because it's an intermediate lesson that we're learning, but let me look for the next best opportunity to re-engage the market, or let me just be patient and see how long it takes to re-enter, okay? When the NASDAQ dropped, those whatever it was, 1,000, I was on vacation. You guys remember I was in Mexico, right? And I said, hey, I'm buying here. I'm buying here and I'm holding, right? That is one of the longest trades in my 8 years that I've ever been in, okay, on the future side, okay, until we hit that beautiful magic number earlier and they closed the gap, okay? I had never been in a trade that long, and I was like, oh my God, like crazy. But guess what? I only had the equivalent of half a size on that account. I went a quarter down a little bit lower. It cost average. I was in the red for like a week, and then eventually just boom, little coming up. I had no problem. There was only two options there. Either the contract would expire and I would then get back in or roll it over, or B, it would put me at break even, actually three on, or B or C, it would go into profit, which it did, right? Had I gone in full contract, I would have lost a lot of money on that trade. I would have lost a lot of money on that trade. I don't do that anymore. I'm protecting my capital. I really don't care. If I make $1 today, man, what a blessing. I want to tell the world I made $1 today, right? I call it Wi-Fi money. If you can make $1 a day extra, right? That's $1 more than you had. So it's just a matter about rethinking, rewiring, right? Rewiring the system, right? In all honesty, if this is what puts food on, if this is the only avenue you have to put food on the table, then you're taking a major risk, because we know there's nothing that we can say in the markets is, a guarantee, right? I would tell you, man, you know what? You're better off opening up a 5% APY and at least making $20 a month or $10 a month type of thing. But this is possible for everyone who understands this dynamic right here, right? You've got to learn how to trade a small account before you're given the reins to go up, right? Think about it. You got to pass kindergarten before you can go to first grade. You can't be given big boy and big girl status of second grade until you pass first grade. Well, a lot of people here just want to go and open up a 500K prop firm, and they want to go right to university and don't know one thing about consistency. Tell me how that goes. You're going to have a good week. You might have a good month, but tell me if you can sustain that for 8 years. That's what I'll leave you with, right? That's what I'll leave you with. Hey, I got to go because I got to go pick up I got to go make a line to go pick up my kid. All right, any final quick questions? Yep, man, it's all about low stress, man. It really is about low stress, Francois. Good stuff right there. Brandon needed a rewire. Gustavo, I think I got your question. Okay, listen, this is kind of like whatever relationship you want to call it. Okay, this is about nurturing a relationship. This is kind of about, how do I nurture my trading relationship, right? When it's being mean to me, I got to be nice to it. Lower the lot size, change the plan, right? Think of different ways to get to the end result, right? How many of you have a traditional IRA or a Roth IRA? Put the number 2 in the chat. If you have any type of IRA or retirement account that you've been working on, drop the number 2 in the chat. Something long-term, right? Something long-term. So, for those of you who are in the States might have that type of account, like myself, right? You can't touch those accounts to your 59.5 without an extra 10% penalty, right? So if you're in your 40s, your 30s, your 50s, unless you're like right at 58, like 1 year to go, right? You've already told yourself that you're investing money in a bucket that you cannot touch for the next 8, 9 years, whatever the case may be. Like I still have 5.5 years to touch all my IRAs that I have. Right? So if I can invest for that for the last 10 years in that, why can't I trade with that same mindset? How can I invest every day and start learning how to make $1 to $5 a day as an equation, and build from that, knowing that this is a 5-year journey, right? This is a 10-year journey, whatever the case may be. I get it. I know we live in a society that everybody wants it today. Everybody wants it now. But I think that's just a recipe for disaster. When I made that change from daily profits to monthly perspective, it really made a huge change in my account. It made a huge change in my psychology. So I'm human, right? Well, of course, I was looking at the NASDAQ and saying, well, you know, eventually, how far down will I want to let it go before I re-engage brand new positions? And I had a number in mind. It was like 17.9, right around there. And I think we got as low as about 18.1, 18.2. That was my mental number. Okay, that was my mental number, because I don't put those triggers in my platform for the brokers to know where all the stop losses are at. But that was my mental number with alerts. Okay, that would have been where I would have closed that trade and taken the L, but I would have re-engaged from that lower level. I wouldn't sit there like Debbie Downer and go call my friends and say, I just lost X amount of thousands of dollars. My God. And now here we go. It's turning around and you're missing the bus. You're missing the bus because you're pouting over your trade. So it's just a rewire. And I think the biggest advice I can give you, this is kind of like a free, you know, coaching type of session, is from everybody I have coached in the last 6 months, the number 1 and number 2 killers of everybody has been over trading, meaning they're in either one position 10 times, praying to the Virgin Mary that it turns around when they should have just had no more than 2 entries, or they're in 10 different symbols at the same time, and their margin levels is going 200, 180, 170, 160, 150, 110, and now you're praying to Jesus that at least one of them turns around, and you don't have the capacity to just say, you know what, screw this lesson. I'm closing half of those positions because I'd rather rebuild with $300 or $400 than start putting with another $300 out of my money that I need for my bills. So if I had 600 and I'm down to 300, you know what? Let me start with this 300 that I already gave to the market, and let me build another 300 up versus wiping out 600. And now I got to reinvest my personal money again. That takes away from aftercare, childcare, whatever bill you pay, and that discourages you of putting your money back in again. So always never let your accounts go to zero, because even if you have $5, we can trade with 10 cents on this chart I'm showing you right here to rebuild an account. But you've got to fix you. You've got to fix psychology. You've got to fix trading less is better. You're looking for long-term investments on this, right? You're looking for the monthly balance. You're not looking for the daily balance. And then over trading and over lot sizing were the 2 things I wanted to mention. So if you can fix over trading, which can mean adding all these positions or all these different symbols, okay, or going in with such a heavy risk. Like when I ask that question every once in a while on the poll, what is your daily expectation? Okay, and I see 5 and 8%, right? I'm like, okay. Show me proof that can happen for a long duration. You won't. There is nobody. Again, I'll share the same stories. I've got 2 friends of mine who trade for companies, multi-million-dollar accounts. Okay, one of them is about 1.5 million. That's the smallest one. They look for 0.5% a month. I will let you go do the math. 0.5% a month. You go do the math. So this is why I tell people, man, if you can build through saving, through putting away stop the coffee drinking every day, $5 here, $5 there. If you can get, a few $1,000s into an account and trade it on your own, right? Thanks, Pat. You're better off than being given the reins of $100,000 of a prop firm where you have to close, you have all these hoops to pay, and do it on your own and build your own wealth that way over time. Okay, so that's my 2 cents. I will see you later. I'll put the recording so others can watch it. Have a beautiful day. We'll re-engage later this evening. Remember, in about an hour, you have major FOMC news. I am done. We will see where the markets go tonight, and we will be ready to make some damage tomorrow with hopefully no lessons. All right, we'll see you later.